Hey guys, what is going on? Welcome into the video. So in this video, I want to talk about a stock that I've been buying heavy on this recent crash in stock price, and in my opinion is shaping up to be one of the best long-term opportunities in the stock market on this discount, and that is C Limited stock, ticker symbol SE. So C is an e-commerce, gaming, and fintech company headquartered in Singapore. Singapore has a very stable political environment, so before anybody starts going off in the comments, no, this company does not have those risks like China stocks do. Alright, so getting back into it, this is a company that I've personally kept close watch on since early 2020. I was a buyer back then as well in the low $100 levels, and ended up taking profits way too early in the high 100s. Looking back on the stock now, I never would have thought that it'd be back at these prices with hugely improved fundamentals, and I feel like this is a way that the market gods are giving me another chance to get into this company for the long term. So C Limited is one of the best growth stories in the market in my opinion. The company is currently valued with a market cap at about $76 billion. The stock is about 65% down from 52-week highs at $372 per share, currently now sitting at $136 per share. So first off, taking a look at the valuation of the company, its current trailing 12-month price to sales ratio is trading right off the multiple that it was trading at right at COVID lows. And also keep in mind that the business quality and moat has improved a ton from a couple years ago. Also keep in mind that in 2022, C is projected to grow revenue at another 50% clip. If it just continues to trade at this current multiple, around 8 price to sales, and they hit their projections, that would of course equal the stock price increasing 50% from these prices 1 year from now. Now also there's many other things that go into valuing a company. C is currently focusing on growing the business as fast as possible and not yet focused on profitability, which that profitability will finally come in 2 to 3 years from now. Taking a look at analyst estimates to get a better visual on where the company could be at in a couple years. So analysts project 49% revenue growth this year, 36% in 2023, 28% in 2024, and about 10% in 2025. So there's a ton of different factors that could sway these revenue numbers, which I'll be going over in a little bit, but that's just a broad projection on where analysts think that this company is going over the coming years. So they're expected to start being profitable in 2024, and based on the current market cap and using that net income projection, in 2024 it'd have a price to earnings ratio of about 21, and based on 2025 net income projections, it would have a price to earnings ratio of about 13 at that time. Now take those projections with a grain of salt, as there are many different variables and scenarios that could play out in this situation, but these are the type of numbers that C can hit as profitability becomes a focus and margins increase at a rapid rate. So the biggest argument against this stock is that it's the cash burning machine, and of course that's very unfavorable in the current market conditions during this recent market crash. So the company is going to continue to burn cash for the next 2 years, but they have more than enough on their balance sheet to cover all liabilities and more. They currently have $11.8 billion in cash with just $4.1 billion in debt. The company employs a strategy a lot like Amazon did, with growth and achieving as much market share as possible as the number one focus, with profitability taking a backseat until future years. They know if they can take as much market share as they can now, they can just increase that profitability that much more in the future. So the company raised a ton of cash at a perfect time as well. They announced a secondary offering on September 8th, which looking back at it now, this is just a couple percent off what ended up being all-time highs. So absolutely perfect timing, that limited shareholder dilution, and essentially was the best case scenario for shareholders looking back at it. Alright, so now talking about the business model and the CEO. So the CEO is Forrest Li. Li is currently the richest man in Singapore and has executed at a very high level over the past few years. His Glassdoor reviews are top-notch and on par with some of the greatest CEOs in the world. Just taking a look at Tim Cook, CEO of Apple, Satya Nadella, CEO of Microsoft, Forrest Li's reviews are right up there with the best, which is always a great sign to see that workers like working for this specific CEO. So now getting into the business model, C has 3 main different businesses. First off, we're going to take a look at C's e-commerce side of the business. This is called Shopee. Taking a look at the last year of growth, gross orders are up 123% year over year, and GMV, which is gross merchandise volume, is up 81% year over year. It also had great growth from the start. Taking a look at these charts from iPrice, we can see that Shopee is currently either the number 1 or 2 player by market share in all of Southeast Asian markets that it operates in. In Indonesia, it's number 2 right behind Tokopedia, and in all these other markets has a sizable and growing lead. These include Thailand, Vietnam, Malaysia, Philippines, and Singapore. Shopee also just entered the India e-commerce market in October of 2021. On this chart from Apptopia, it is represented by that dark red line, as you can see on the bottom right of the screen. Just in this limited time frame, it has eclipsed Amazon and multiple others in this time and is now in top 3 in Indian e-commerce, another emerging market with absolutely huge growth potential. Also, the other day, I saw this tweet showing that Shopee is looking to hire in Poland, just another market they're working on and another growth driver. Bloomberg also recently wrote a piece that they believe Shopee's market share in Brazil could rise to 20% in 2025. In the article, a couple points that they make. They say investors have been particularly interested in Shopee, which started its operations in Brazil in 2019, focused on low-ticket items. Its e-commerce market share in the country is estimated by Goldman Sachs Group to be in the high single digits. Competition from the Southeast Asia giant became a key topic last year. Goldman analysts led by Irma wrote in a report dated January 12th, adding that the firm's market share could rise to 20% by 2025. Shopee's local operations in Latin America have been gaining traction, and the company was mentioned as a top 3 e-commerce purchase destination by 37% of consumers last year, up from 6% in 2020. So that's Shopee, currently the biggest growth driver of Sea's business. Now taking a look at the next business model that Sea has, and this is in the gaming sector, and this is called Garena. So Garena is the highly profitable side of Sea, and the cash flow from this part of the business has been able to sustain and fuel a lot of the unprofitable growth focus in Shopee. Another bearish argument against this company is that Garena's growth has come from just one hit game called Free Fire, and that growth is now coming to a halt. As we can see from these numbers from last quarter, quarterly active users are up 27% year over year, but just grew by 4 million in the last quarter, and quarterly paying users are up 43% year over year, but only grew 1 million last quarter. So let's talk about this some. Free Fire is a battle royale game, and you could essentially say that it's like the Fortnite or PUBG of Latin America, India, and Southeast Asia. Taking a look at Google Trends, we can see that Free Fire is right up there with the others, and you could say that it's even on more of an upward trajectory than those other two. Sea has done a great job getting in-game partnerships. They recently launched the game globally, and the Free Fire World Series was actually the #1 most popular esports tournament of 2021, including 5.4 million peak viewers. What this hit game has allowed Sea to do is build up a strong following behind the Garena business. Just take a look at all of the people at this event put on by Sea. They also have other esports events they put on, such as Garena World. So they're just building this brand up, creating a strong following. So maybe the hit game Free Fire continues to be a hit game for the next few years, or maybe the numbers are going to start to decline from here. Overall, though, the game has allowed them to build that strong following, so when that new big trend comes by, they can capitalize and make a new hit game. The Battle Royale game type has been the most popular type of game over the past few years, and it's inevitable that the next trend comes along, and when that happens, in my opinion, Garena has a great chance to capitalize and create that new hit game for its strong following. The gaming business and what hit game will come along is probably the biggest variable for this company. I personally really like the odds for them to execute on that and put that growth and profitability into the next year and hit some big growth numbers from here. So the final business model in Sea is called Sea Money, and this is their fintech and digital payment side of the business. Now, I'm not going to go deep into this business model in this video just for time's sake, but this is just another growth engine behind the business that will become more profitable over time. In Q3 of 2020, Sea Money had 17.8 million paying users and revenue of 14.4 million. Versus their most recent results of Q3 2021, they had 39.3 million paying users and revenue of $132.2 million. Absolutely huge growth over the past year, and as we know, as fintech companies mature, it's a very, very profitable, high margin business model. Alright, so now the final question. When will this stock bottom and where could it go over the coming years? Based on the chart, it's still a pretty ugly falling knife. The most likely scenario is for this bearish trend to continue in the short term, but at the same time, I would not be surprised if Sea is at or near a bottom after bouncing off that $120 level of support this past Friday. Very attractive valuation at these prices, now well below a $100 billion market cap, and I personally think as long as the company continues to execute and hit those future profitability projections, I think that by 2024, it could be back at that 180 to $200 billion market cap, which would equate to a forward PE ratio of 30 to 35 based on those 2025 projections, which would equal between a 200 and 300% move to the upside in stock price in a span of just 2 years. Now, of course, there's many other variables to take into account, such as Garena creating a new hit game or anything like that, but this is a pretty fair base case scenario in my opinion, with of course other variables that can sway it either more to the upside or to the downside depending on how well the company continues to execute. So that is my thesis on C Limited stock, ticker symbol SE. My personal plan with this is just continue to dollar cost average in on any red days at these levels and slowly continue to build out that long-term position. As if they hit those projections, in my opinion, this has a great chance to be in multi-bagger over the next few years. So thanks so much for watching the video, guys. I greatly appreciate it. Make sure to hit the like button and subscribe button down below. It helps me out a ton. And for anybody interested in joining the private Discord chat, that's the first link down in the description. You get all my buy and sell alerts anytime I make a trade. I answer any questions you have and I send nightly watch lists for trade ideas for the next day. So once again, that's the first link down in the description. Thanks for watching, guys. Make sure to be smart in this market, and I'll catch you all next time. Peace.